When I first started trading, I was confused, not just by the huge range of brokers out there, but also from the vast amount of trading platforms to choose from. Some brokers, like Trading 212, offer their own built-in trading platform, whereas other brokers, such as IC Markets and Awanda, use a platform called MetaTrader. If you're new to trading and you feel the same type of overwhelm that I felt, don't worry, I've got you. In this video, I will guide you through getting set up trading using the MetaTrader 5 platform. MT5 is one of the most popular platforms worldwide. It's powerful, versatile, packed with many features, and it also has a free app available that you can download on your mobile phone. Whether you're just getting started or you're switching platforms, this guide will help you to understand the different order types that you can use in MT5 and how to use them with confidence. If you've not already signed up with a broker or got MT5, I have got a link below in the description where you can get set up, and I'm going to run through the process super quick before we dive into the different order types. So please remember to like and subscribe to the channel, and let's get straight into it. Before heading to the MetaTrader 5 platform, I'm going to very quickly set up a free demo account. So if you've not done this already, feel free to follow along. I'm in IC Markets. I'm going to log in because I've already created an account. I've been trading with IC Markets for a very long time. From the IC Markets dashboard, I can navigate to Demo Account and open New Demo Account. Now I'm in MetaTrader 5, but you can choose MetaTrader 4 if you prefer. I'm just going to go with the newest platform. Raw spreads, I'm going to go into pounds, and let's make this a £10,000 account. And it's that quick to set it up. Scrolling to the bottom, I can get the details from here to be able to log into the account. And if you've not already got MetaTrader 5, you can download it for free from the MetaTrader 5 platform or directly from your broker. So if I go into downloads here on IC Markets, I can access and download MetaTrader 5. Let's start with the basics, and let's start with a manual order, also known as a market order, because this order is triggered at the current market price. So I'm talking about very simply buying and selling into a trade. So for this, I'm going to stick with pound dollar in the demonstration. Obviously, I've set up a demo account with you today because I don't want to just go through demonstrating all of these different order types in my live account. It's always good to test out new strategies and techniques in a demo account. So the goal of this video today is to share with you how to open these different order types. I'm not trying to win or make money from my trading. I'm not trying to demonstrate strategies. There is no method to why I'm buying at specific points. I'm just demonstrating how to place those order types. So first things first, pound dollar. Let's do a market order to buy. There are two different ways of doing this. The most easiest one is, of course, up here to click buy. Now, if you don't have this little window, sometimes it can be hidden with this button here. So just make sure you've got that open. And of course, when you are doing this for real trading, you want to just take into consideration your lot size, your position size for the trade. So obviously it doesn't matter for me because I am in a demo. But generally, a good rule of thumb is to risk 1 to 2% of your overall account for a trade. There are many free calculators you can use to figure that out. So I do have a separate video that talks more about a free calculator, or if you prefer, you can get a tool. I've got this one, Magic Keys, which is a useful position size calculator. So we can buy here. For your first trade, you will have this terms and conditions box come up. Once you accept those, that shouldn't come up again. So I can buy that order, and very simply, I am in the market long. You can see at the bottom here, once you are in your trade panel, the order comes up, what symbol you are in, which asset, whether you have brought or whether you have sold. So I've brought this one, the volume, the position size, and the price. So you have brought, or I have brought at 1.32908. The current price is 1.32922. So obviously I am currently in profit. The other way that you can place an order, if you don't want to just buy straight in and be straight in the trade, is you can actually right click anywhere on your chart. On here, there will be a trading option, and if you hover over that, It gives you some options here and you can click new order. Now it doesn't set it straight away, it loads this window, and some of you may prefer to do this method because it means that you can enter in more information about your order before you place it. So this may be a good option if you, for example, want to already set a stop loss and a take profit, which we will talk more about later in the video. Next is to sell. So we have brought, let's just sell. So just to clarify, this is where you want to go short. So you believe that an asset, so I'm in pound dollar, you believe that it's going to go down. In fact, as we've already brought pound dollar, let's choose something else to sell. Let's have a go at selling gold. So if I believe that gold is going to go down, I will simply just hover over the sell and I will sell that position. And you can see this also comes up in the trade panel at the bottom. So we've got our pound dollar trade that we brought. Here is the sell position that I've just placed for gold. The same lot size information, the current price, so that's the price we sold at, and the current price of gold, so it's currently at this, which is above the price I sold at, which means that we're currently in a loss. It's also really important to take note of the spread. The spread is the difference between the sell price and the buy price. Sometimes you may sell a position, and because you've sold, whenever you want to look at your profit, it will the system will be looking at the current buy price. So you're always going to enter into a position in the negative because you've got the spread to take into consideration. That's why it's important to get a raw spread account. If you can get the buy and the sell price as close together as possible, as little spread, it means that you're going to mitigate that risk when you enter a position. So I have brought, I have sold. Let's talk about manually closing these positions. It is super easy to manually close your position in the trade tab here at the bottom. You can see on the far right hand side there is a cross next to the profit. Now that is unrealized. That means that we haven't actually made this money yet because we are still in the position. But if you want to close that position out, so you can see gold is currently up around about £6, I can click that cross and that will sell. And I can do the same for pound dollar. I can simply click that cross and sell that position. Now that has disappeared. Where has it gone? Well, if we want to check out the history that's in this tab here, history of the positions we have taken. So we can see the details for the gold trade, the sell, and we made a profit here, minus the commission, and a buy trade for pound dollar, which is here. Next up, I'm going to show you how to place a manual stop loss and take profit order. These are essential for good risk management practices. I've been trading with the prop firm, the 5%ers, for some time now. As a prop firm, they are a great option if you want to trade a larger capital, where you can trade one of their account sizes and you both take a share of any profits that are made. But they don't stop there. As well as offering account sizes for trading, they also offer these extra features, including live trading room, free webinars and workshops, and one-on-one performance coaching. They have 3 different programs that they offer to traders: the Hypergrowth, High Stakes, and Bootcamp program. I'm currently funded with the Hypergrowth program, so I am trading that live account with the 5%ers and taking a split of profits that are made. And I'm currently enrolled in the High Stakes program challenge as well. And my favorite feature of the programs that the 5%ers offer that differ from any other prop firm out there is the fact that they have removed the time limit, which means that you have an unlimited amount of time to pass the program. This is a massive game changer, and it can really help you to avoid falling into a stressful situation when you are trading. Let's face it, trading can be stressful enough. If you want some more information, or if you're ready to have a go for yourself, do check out the link below in the description. Let's talk about stop losses. A stop loss automatically closes your position when price crosses a certain level. And the best way to explain that is, of course, to demonstrate it. So I'm going to just drop down to a faster time frame here. Let's buy a position in pound dollar. So I've just placed a buy order. I am long at 3293. And there are 2 ways that you can set a stop loss position. You'll notice here that there is SL on this order and it's blank. That means there is no stop loss. So if this plummets, if it goes down, you will just keep racking up a loss, a really big loss. It won't get out until you manually close it. And that's so dangerous. It's why it's crucial to remember to set a stop loss. It's a safety net under your trade so that if it goes against you, you will only lose as much money as you are prepared to lose. Ever since I've been trading, I've been using stop losses. And quite honestly, I find MetaTrader platform to be the easiest platform to quickly set a stop loss order. It's another reason why I use this platform. So let's go through the different ways of setting a stop loss. First of all, you can go underneath the SL where it's blank and double click, and that will load up this little position window. Now this only applies when you're in the trade, and the only things you can enter are the stop loss and the take profit. We'll talk more about the take profit later. Let's just focus on the stop loss. So if we are in at 1.3293, let's just say we're going to set a very tight stop loss of 90. I could enter in 1.3290, and when you click modify here, you will see that that has automatically been entered into that blank space underneath SL. Now at the moment it's actually highlighted red, and that is because it is within 10 pips of the current price. So as price comes within 10 pips of your stop loss, it will highlight red just to show you that it's getting close to your stop. So that's the first way of doing a stop loss. Now, if I click the X next to that, that will cancel the stop loss order. So now I've removed the stop loss order. We are open again and price is coming down. So what's another way I can set a stop loss? You may see on the chart here, this green dotted line. This is the current trade, the order I am in, long at 1.3293. Now, if you click and hold that green line and come down, that will bring this red dashed line, and that is another way to set a stop loss. So I can drag that down and I can place it underneath where price is. And you'll notice that as I drop that, not only do we get this red dotted line on the chart, but it also automatically enters in a price here back in that window. So this is another way to set a stop loss that can be quite useful if you are in a hurry, if the trade is moving quickly and you want to set the stop loss quickly. You can simply just edit this on the screen. You can click and hold and drag it around. Or you can do it once and then you can double click and open up your window again, and you can edit it here if you want to get a more accurate position. Always use a stop loss, your account will thank you. Now let's talk about take profit. As you can probably guess, a take profit is very similar to a stop loss, but in the other direction. When you set a take profit order, this will automatically close your position when you are at a certain point in profit. So this is a great way to bank profits if you are trading on the go, if you are trading alongside a full-time job. This is a very useful way to manage your trade because you can set a stop loss order to protect your account, and you can set a take profit order to know that you will automatically make money when price hits a certain level. Another useful way to utilize a take profit is for emotional reasons. Trading can get very emotional. If you know that you may get influenced from your emotions, so if a trade comes up to a point where you want to get out, but you are afraid to get out of the position because you want to make more money, you're getting greedy, but then it goes against you. That's another really useful way of using a take profit because it can take you out of the equation. It removes that emotional decision and it means that it will automatically get out. And once again, there are two ways of setting a take profit order. We can locate TP on the trade panel here, right next to stop loss, TP for take profit. Underneath there, it is blank. We haven't set it yet. We can double click on there. And once again, we can enter in a take profit. But naturally, because this is a take profit, the figure we enter needs to be above the current trade position because we are in a buy. So if the current trade position is 13293, let's put 1.3295, just a couple of pips above for this demonstration. And we now have another dotted red line, but it's above our buy position. And it also has TP there on the far left. So we have our SL, our stop loss below, and our TP, take profit, above. And it adds the digits right here. The other way of setting or editing your take profit, if I just cancel that, is once again to click and drag on our order, but instead of coming down where we are seeing the SL, we want to go above where it turns into TP for take profit, and you can drag that and it will add the position here. And once again, you may notice that is also highlighted green. In the same way that the stop loss highlights red when you are 10 pips away, a take profit highlights green when you are within 10 pips of that take profit zone. and you can click and hold and drag that order. So let's make them both quite tight so that we can get some execution. We're either going to trigger the stop loss order or the take profit order. There we go. So price has come down. It's gone straight through my stop loss order. So that trade has automatically closed, and you can see details of it in the history panel. It's highlighted red on SL to show you that it hit the stop loss, and that's why the position got closed. Now we're going to talk about pending orders. Pending orders allow you to plan ahead. And it is where you place a pending order and the order is only triggered when price hits a certain point. There are 4 types of pending orders. For buy orders, there is a buy limit, which is used when you want to buy below the current price. You are waiting for a dip to buy before price rises higher. And the inverse of that is a sell limit. So that is where you want to sell above the current price. You're waiting for a pullback up to sell, anticipating the price to drop to your profit. Then there are stop orders. There is a buy stop, which is where you buy above the current price. These are particularly used for breakout traders. So you are expecting price to push upwards to break out, and in so doing, triggering your order so that you buy into the trade with that volume surge, with the momentum. And then there is a sell stop. The same in the other direction. You have a sell order below the current price. You are waiting for price to push down, triggering your order in, getting you into the trade short. So first, let's have a little look at a buy limit order. And I think I'll have a look at gold because it looks like it's dropping down here. I'm going to hover over where I want to buy in for the trade and right click on the chart. We can hover over trading and we can open a new order, or we can automatically click here buy limit. Now it'll have the digits next to it, which is the lot size that you have there on your screen, and it will tell you the figure here where you want to automatically set your buy limit. Now if you want to enter the specifics, which is probably advisable to get it more accurate, you can just click on new order. And under here, we want to change the type from market execution to pending order because we're going to set a buy limit. So the type needs to be buy limit. You can edit your position size and enter in your price. So price is currently at 325.704. Let's just make this 3256.50. I'm going to place that for now because I want to show you how this works before price turns around. We've got this green dashed line here. We're not in this trade yet. We're waiting for price to come down and push below this green line. When I place that order in that order window, I could have also set my stop loss at the same time if I wanted to. But if you do it in a hurry like I've just done, you can add your stop loss in as I showed you before. If you set your buy limit and you want to change it, you can simply click and drag on that line and move it around, the same as you do with your stop loss or take profit. Or you can hover over the price here at the bottom and double click on those digits, and that will load up your panel again where you can change the price of your buy limit order, and you can also add a stop loss and take profit if you want to. As price is pushing up, I'm going to just trail underneath the current price because I want to get triggered into this to show you how it works. There we go. So we're triggered into this buy trade, finally. Price just dipped down a little bit, crossed over that line, and it triggered that pending order. So now we are live in the market as a buy. Naturally, with these kind of orders, it's really important to remember to place your stop loss and your take profit. Personally, I would never place a limit order or a stop order without placing the stop loss and the take profit at the same time, because it's so easy to place them and forget, and you don't want that kind of risk, trust me. Sell limits are used when you want to sell above the current price. So let's try and find somewhere on the chart where we think price is pushing up and may trigger a sell limit. We may as well look to sell in gold. It's currently pushing up at the moment. I'm going to do the same process as we just did for the buy limit. I'm going to right click on my chart above the current price. You can just automatically sell right there, or you can go into your trading, new order, and you can change this to pending order and change the type to a sell limit. And this is where you can enter in the price, but it must be above the current price. So if the current price is 3262, I'm going to just put 3263. Oh, it's already crossing there. Let's put 3263.50. And you'll see this will place a dotted green line above price. The order's down here, a sell limit. It's below my balance because it's pending, it's not been triggered yet. And once again, if I want to change that, I can click and hold and drag that line around. I can double click here on the price, change that, enter in a stop loss, enter in a take profit. In fact, let's do that now for this demonstration. So the stop loss would be above the price. So let's just put one at 3265, modify, and that will add the stop loss there. And you can even see the dotted red line. So even though this trade hasn't been triggered yet, I'm not active in this trade. I'm not short. It's a pending order. I can still place my stop loss, and I can even place a take profit. Now the difference is you can't click and hold and drag this as you do with a live trade because it will automatically just move the sell limit around. But it's so clever, you see how it also moves the stop loss that we set around as well. So we can do that, but to place a take profit, we have to double click on that empty space and type it in manually at this point. But you can see all three orders here on the screen. You can see them here in the trade panel and you can see them on the chart. So the green dashed line is my sell limit. I can just move that down a bit. So when price pushes up, it will trigger me into this trade short. And of course, I've got my stop loss and my take profit already set. I imagine gold is going to do the same as before, and it's probably going to just keep coming down now. So let's just follow this again so that we can demonstrate how this order is triggered. A quick word about these limit orders. I use them pretty much all the time. It's quite rare that I will just get into a trade at market. I mostly will use a limit order because of my trading strategy. I am using a trend continuation based strategy. I'm generally waiting for pullbacks and at a specific area, and that's where I will have a limit order waiting. So price is about to cross this green dotted line and it should move from below the balance to above the balance, triggering me into this short. There we go, we're in. So we're automatically sold at this level on gold. My stop loss is placed, my take profit is placed, but now because I'm in the trade and I'm live, now I can click and hold and drag the stop loss and the take profit about, because this is now a live trade. Or of course, just click the X to close the position. Let's talk about stop orders. There are two different stop orders available, a buy stop and a sell stop. These are brilliant if you are a momentum trader, if you like to trade with volume surges, because it will get you into the trade as the price pushes up or down, depending on which way you are going. So let's try and find something that's moving. I'm going to stick with gold, and I think this is probably going to go up. So let's have a go at setting a buy stop order. So the idea of this is you're waiting for price to push up, triggering your order in. It's going to be placed above where price is currently at. So I'm going to hover above price and right click on the charts. As before, it brings up sell limits, but if you hover over trading, you can automatically press this button, buy stop. Keeping in mind, it will automatically place your order with your position size and this point here, or you can click on new order. If I click on new order, once again, we have to change the type to pending order, and we have to change it from a buy limit to a buy stop. Now you can change the volume and you can obviously enter in your price, which must be above the current price. So price is currently at 3261. I'm going to place it at 3261.30, just above price. If I was doing this in the live markets, I would be placing this above a key level, somewhere in line with my strategy. I wouldn't just be placing it randomly like this. This is just to demonstrate to you how the order works. But once again, once you place the buy stop, you'll see the dotted line. It will say buy stop here on the left, and it will display it at the bottom. You can double click on this to load up your panel if you want to change it, enter a stop loss, enter a take profit, or you can click, hold and drag that dotted line. As long as it remains above price, then whenever price pushes above this line, it will trigger you into that position long. So price is pushed up, and you may notice it didn't actually cross that line, but it triggered me in, and now I'm long. And this might happen to you, and you might be wondering why. And that is because of the spread that we talked about before. got to keep in mind that there is a difference here in the spread, and we are looking at the buy price when we are looking to buy. That is the figure that will trigger us into the trade. But a buy stop can be very useful, especially for short-term trading or even scalping, as you can see in this way, because it triggers us in as it pushes up, which means that there's a higher chance that you're going to immediately get into profit. Now let's look at the final pending order, and that is a sell stop. As price is pushing up, I'm going to look for something that is probably going to come down. Let's look at the DAX. This is the German index market. I want to set a sell stop. So I'm looking for price to come down, triggering me into the short. So I need to place my sell stop below the current price. So I'm going to hover below the current price on the chart, right click, hover over trading and place a new order. I'm going to change this to a pending order and we're going to click on sell stop. Again, you can edit your position size and enter your price. So price is currently at 2281.950. So let's put 2281.7 and place. Let's go to the 1 minute time frame. That's placed my order here just below this candlestick with current price. You can see sell stop on the left here. I haven't entered in a stop loss, but it's exactly the same theory as with the buy stop. You can enter it in when you place the order here in that original window, or you can double click on your blank space, enter in your stop, enter in your take profit. So as price is coming down now, it should trigger me into this trade short if it crosses this line. There we go. So price has just dropped down. It's triggered me into this trade short. So now I am in this with a sell position. And the same again, now we're into this trade. You can click from the position and drag up to bring your stop loss or your take profit. Or you can simply close the position once you are in profit. I've got one final order type that I want to share with you. And to be honest, I very rarely use this myself, and that is a trailing stop. This dynamic tool adjusts your stop loss order as the market moves in your direction. Meaning that if you are long and price is pushing up, you can, instead of having a take profit order, you can have a trailing stop loss order. So it kind of gives the stock or the asset, whatever you are trading, it gives it more room to move. So if you're expecting it to push up quite high, it's a way that you can try to really trail and capture the most profit from the trade. Now, there are a few reasons why I don't choose to use a trailing stop, and I can talk more about that in a separate video. If you're interested, let me know in the comments below. But for now, let's just set one. I'm not using the pound dollar too much today because as I'm recording this, NFP is due out this afternoon. So the volume is basically dead for the dollar today. So let's see if I can find something else that's moving. Maybe pound yen. That looks like it's moving a little bit more. Okay, so I'm going to buy into pound yen. And the same as before, I can set a hard stop loss. So this will be below my current price of 56. But to set a trading stop, I'm going to right click over my order, hover over trading stop. Now you can set one like this. I'm going to select a custom one and I'm going to choose 150 points. Now this can be a bit confusing when it comes to terminologies. There's points, there are pips, and if you're trading stocks, you are just using pounds or dollars, and it can get quite confusing. But with the point system, with Forex, I'm going to make that 150, which would be the equivalent of 15 pips. In fact, let's make that 100 points, 10 pips. It's going to come down anyway. I'm going to repeat this process and find a pair that's going to push up so you can see exactly the logistics of how the trading stop works. All right, let's do this again. I have sold pound yen and I'm going to set a 45-point trading stop. Now, this would be the equivalent of 4.5 pips. If I hover over trading stops, that's ticked. And as price is moving down now into profit, so I'm short at 50. I've got a hard stop loss above this area here at 58. Now, if this drops down, theoretically, as this gets to about 45.5, I should be seeing, yes, this dotted line appear, and that's my trading stop because I chose 45 points. That's 4.5 pips. Now you can obviously make that more or less by clicking on custom. So if I want that to be a 10 pip trading stop, I would enter in 100 points. It's a little bit confusing. It takes a little bit of getting used to. The best thing that you can do with utilizing trading stops is to practice in a demo with fake virtual money and practice what works right for you. Personally, I don't like to use them. That is a full breakdown of how every order type works in the MetaTrader 5, the MT5 platform. MT4 is incredibly similar, so you should be able to pretty much figure it out from this video as well. If you want some more resources for day trading, if you want some more useful tips, do check out the other videos on my channel or the links in the description below. Meanwhile, if you've enjoyed this video, please let me know by hitting that like button. Don't forget to subscribe to the channel, and I'll catch you on my next video. Thanks for watching. Bye.